I think bond yields have saw their pivot high, and I think that it wasn't necessarily that Trump was watching the bond market. It was that Scott Bessent was watching the bond market, and it was that Jamie Dimon and all of these people were telling Trump, like, dude, you need to back off. What is going on, everyone? Welcome to Investing with the Boys, episode 13, the big 1-3. We're recording this on Wednesday evening. The market is up 10.5% today, one of the 6 largest days in the stock market. Nasdaq is up 12% today, the 3rd largest move in history for the Nasdaq. Last time it was up this big was 2008, near the bottom of the entire crisis. I mean, everything was just moving today. A lot of software was moving, ad tech was moving, everything was really moving. Crypto was moving, everything. The only thing that wasn't moving that much was ex-US as far as China. But besides that, big news was that Trump decided to do a 90-day pause on his tariffs just hours after starting the tariffs today on April 9. Wow, what a day today. How is everything, guys? How are you doing, Logical?
Yeah, I just wanted to actually, you mentioned something, and the last time we had a big update like this in the market was in October 2008. I think that's a stat I saw. So that was definitely far away from the bottom of the crisis. We still went way lower from there. So it's important to remember that we have our biggest rippers during bear markets. So sometimes the biggest updates end up still being in bear markets. So that's kind of something we still need to keep at the back of our minds. Ultimately, until we really reclaim the 200-day on SPY, which is around 570 something, everyone's kind of, it's a guilty till proven innocent rally. But today was great because we had, like you said, a 10.5% day, bullish engulfing clearly on the daily, above the 9 EMA, which is a starting point from a technical perspective. SPY moved 50 points. So crazy move today. And the best part about it was it wasn't an oversold technical bounce. There was, it might have been, but there was something bigger driving it, which was that pause of the tariffs, which you were mentioning, which is so funny because 2 days ago we had that quote unquote fake headline. They blamed Walter Bloomberg for leaking that information, and it wasn't right. And the White House denies it. 2 days later, they do it as soon as tariffs go into effect. I'll tell you how I was feeling. Dude, I am exhausted from this market. I am exhausted from these headlines. Last night I woke up in the middle of the night. I think that's been happening far too often lately. It's been very stressful, especially if you're fully trading this market. 4 in the morning, we're on Pacific time, so it's 7 a.m. for Eastern. So I saw the 84% retaliation tariff by China, and immediately I thought, oh my goodness, this is so bearish. This is the worst thing that could happen. I had some short exposure just to get my net long exposure coming into today, and I added shorts because I'm like, dude, this is gonna be ugly. If we're just in a pissing contest, this is horrible. So yeah, I was just a little bit scared, but then as the market opened, I noticed that the things that were shorting were actually kind of green, and the market was flat on the day, and it wasn't going lower, wasn't making new lows compared to the 481 on SPY on Monday. And by the way, 480 is a pretty big level. It was the 2021 highs before we went into a bear market. So we kind of retested those levels on Monday morning. We obviously we rallied that day. And yeah, so that was clear capitulation. But yeah, we didn't make new lows. So I thought, hey, look, if we got the worst news possible and we didn't go lower, that is a pretty good thing to have. So I covered my shorts quickly. And then what do you know? A couple hours later, you're getting this pausing tariff news, and I was just a big buyer of equities into the day. I day traded a few of them, unloaded a couple by the end of the day. You caught massive moves. After things were rallying, I picked some stuff up, and the trade desk, for example. I picked it up after the rally. It was the 5th stock I bought, and it was up another 8% in the day. And so I ended up dropping it because I wanted to reduce some exposure, and I might regret that, especially considering ad tech could clearly be a big winner if the reason why we sold off is due to the uncertainty in tariffs, and those have been pricing in a clear economic slowdown. Again, I still think we're going to have an economic slowdown. I think this has caused a lot of uncertainty, and businesses have been pulling back spend, trying to kind of wait for the all clear. So we're still in limbo, but earnings are in the corner, so hopefully we get some clarity there. I'll pass it to Shai and get his thoughts.
No, I mean, today was, we should call this a Steve Nash episode, number 1-3, because we got the assist today from POTUS. What a face-melting rally we experienced. And I think it was finally the market responding to something it's been starving for, because we had a couple days of just like blow-off tops or like 5 to 8% swings up, and then we faded it. They're looking for some kind of signal, and you can say what you want about the approach from the Trump-led presidency this week, but today's move, in my opinion, showed something like really important, and it's that the administration is showing some glimpse of a strategy. It's not just some mindless escalation that they're creating this like ChatGPT calculus to come up with the tariffs. So I do believe that pausing tariffs on key partners while maintaining the pressure on China isn't chaos. It's somewhat of clarity. And the chaos and circus has been the words I've been calling the past week or so since Liberation Day. Today was not that. And I think that's finally a breath of fresh air. But like what Logical was saying, the rules are still changing. Like, we all added aggressively as soon as we saw that headline. Like, I don't have any cash anymore. I don't know if you guys have any more cash. It sounds like Logical, you might have something
I have a few
sold.
percentage. I have a few percentage of cash left.
Yep.
So I'm 120% long at this moment, but I keep changing that day to day, so it is what it is.
Well, that's the thing. Like, it's going to change because I don't think volatility is over. It's not, because this was a material shift in tone and policy. This is like the first time in months that risk assets finally felt like there was some kind of pricing direction. They weren't just reacting to noise. Like, this was actually something structurally, like a structural roadmap per se. And that matters because it's been chaotic. It's been a circus. But this is not the end of the campaign. I think it's really important for everyone listening. Like, although I've never seen video game numbers like this today in my portfolio or in the indices, but it's not over. Like, China is still very much the focus, and this 90-day pause that we're giving them gives somewhat of breathing room, but it's almost like kicking the can down the road. Like, it does allow enterprises to work in a sandbox to control their risk and be able to adapt, and it gives investors something that we just have not had in a while, something that we can actually price risk going forward. But keep in mind, this is going to get ugly still. Like,
Yeah.
China is an export god. Everything, like, they export the world essentially, and they don't really have too much internal demand. And that's, I think, why Trump was going through this stance or strategy, you could call it strategy, of applying a peanut butter tariff spread across the whole world, because he wanted to squeeze everyone around China, because China was exporting to everyone. But if he was penalizing everyone around China, who's that going to hurt? It's going to hurt China's export, and that's going to squeeze them out. So unfortunately, we were punishing our allies in order to really hurt the main enemy that we have right now, which is China. And he did not communicate that effectively. This is just me reading between the lines. But I think today validated that, this is purely East versus West, U.S. versus China, and that has so much more runway to escalate even more. And there might be some more pain going forward, but either way, we got some kind of a roadmap now, and it feels nice. But it is a ways over. Like what Logical is saying, like, SPY needs to clear. For me to get confident, SPY needs to clear 575, and it's at 546 right now. That's a 7 to 8% move. Qs have a long road of recovery. Like, it's at 466. It needs to clear 494. Like, that's another 8 to 10%. That's 8 to 10%, 8 or 9% move. So, like, we got ways to go, and earnings just around the corner. So I don't know, Sam. What are your thoughts about today's rally? Is the bottom in, or is this a potential head fake?
Hey everyone, just want to give a shout out to our sponsor, ValueSense. The landscape of investment research is undergoing a massive shift. Sentiment tracking, automated valuation models, and real-time fundamental analysis are no longer the domain of hedge funds alone. ValueSense is breaking down these walls, ensuring that sophisticated, data-driven strategies are no longer monopolized by the financial elite. If you are interested in getting a leg up on the competition, check out ValueSense at valuesense.io. So let's take a quick look through their platform. You can basically find any stock you want and take a look at their fundamentals, all sorts of momentum factors. Let's take a quick look at Microsoft. Let's see. Okay, gives you a quality rating. Nice to see. So you could see revenue growth. It's giving you historical averages, operating income growth. Wow, charts over time showing you gross profit growth, revenue growth. Basically, you can just use this to do deep dive research on any company that you're interested in. And there's going to be ways to create reports and compare across different stocks. And it's a great tool to basically just start doing your research and finding potential opportunities, getting a shopping list together, given that, right now we're in a bit of market turmoil. Great tool. Love it. Great UI. Check it out.
I don't think it's a head fake, but I'm with you. I don't necessarily think I think the bottom is in for now. But I don't think we're going to go to all-time highs. It's very possible we might pull back a little bit, come back, whatever it is. I think that given that when the tariffs actually did go in place yesterday or last night at 12 a.m., when the tariffs went in place, the market dumped on that. But I was looking at the futures overnight. We were on I was on the Wolf Spaces for a while and watching it, and it recovered quite a bit before anything came about. And I was watching it pretty closely because I was just curious, like, wait, this is so weird. Why are the futures bouncing, but the treasury market, because we didn't talk about the bonds yet, the 30-year, basically anything on the long end of the curve was getting dumped as far as bonds. The yields were spiking so hard yesterday. The 10-year was around 4.5%. The 30-year was around 5%. And this is like a 60 basis plus point move in 48 hours. Like, it's actually pretty crazy how things ripped up so hard last night after that move. So, I mean, to be honest, so that was very interesting. And when you kind of think of the dynamics of the market, when you have the equity markets go up and down, that has a detrimental impact, of course, to the financial system. But when you're talking about bond yields ripping half a percentage point in a matter of 48 hours, these are financial institutions that base a lot of their liquidity on that, right? So a lot more than what we can expect. Not like retail traders going long Tesla falls to 50%, whatever. But like when you have that move happen, a lot of banks could possibly be in trouble. There's a lot of risk that red alert firms, whatever. I'm pretty sure Trump was getting his phone ringing off the hook from Jamie Dimon and a bunch of other CEOs of banks around the entire world. And I'm pretty sure that we saw the Powell pivot version of the Trump pivot today. I think we're going to always recognize that April 9 was the day, April 9 of 2025 was the day that we had the Trump pivot. Historical day. The market is up 10%. Nasdaq is up 12%. This is a day we're going to remember for years. This is why I don't think we're going to make a new low. But I don't think we're going to make a new high. Because now the market understands that it literally just takes one tweet to make the market fall 20%. Not make the market fall 1 to 2%, but it just takes one man to make the market go into the bear market. And that's scary. In 2023 and 2024, we never had that problem. No one ever had to worry about Biden putting up 104% tariffs in China or anything. He was kind of, doing what he can to make sure everyone's all friendly, doing the spending and everything. But like, we clearly don't have that scenario anymore. And I got to be honest, I'm a little concerned about the earnings coming up because, yes, we do have some light at the end of the tunnel as far as where these tariffs are going. I think we could all say pretty confidently these tariffs are not coming back on for the other countries. Like, I don't think they're going to come back on. We all know that China is the target, like you're saying, Shai. China is the target in this whole scenario. Otherwise, he would have taken the tariffs off China. So let's not forget, China still has 104% tariffs, and we still have 84% tariffs on our imports to China, which we don't really have to worry about. That risk is still there. I mean, what do you think, Logical?
I mean, I think, right, like what he did today was foolish. I mean, not today, but what he's been doing for the last 2 months. I think that the policy has just been, people who are trying to defend what he's done are silly because he ended up basically losing. He thought he was going to set out and do something. And the problem is, if you're going to take on a worthy adversary like China, and you're making them an adversary for some reason instead of some sort of great trade partner because we rely on them so much. And I guess maybe that's part of it, is that we rely on them so much. Is like, dude, maybe don't start a fight with the entire world at the same time. You can't do that. So I think, the bond, like they said, they're not watching the stock market, but they're definitely watching the bond market, because that's when that really affects the real economy. And their whole, I think there was a point where Donald Trump on Truth Social is like retweeting or reposting or retruthing, I should say, a video about someone saying, oh, he's playing 4D chess and he's going to get interest rates down. Oh, yeah, Donald. We just saw the 10-year spike right back to where it was before you started this tariff tantrum. So, bond market called BS, whether it was, potentially, I don't know the exact reasons. I'm not going to pretend to know, but people were saying offloading, people were offloading, the China was offloading our U.S. bonds, something like that. I don't know. That could cause, go ahead.
China and Japan are one of the largest holders of treasuries as far as ex-US. And Japan currency, the yen was actually weakening during this process. Actually, no, it was actually gaining steam during this process. But the Chinese yuan was collapsing during this process. The last time we saw this happen was, what was it, last December, or I forget exactly when it was, and that's when the 10-year was going all the way to 4.8%. And then we saw what happened as that began to unwind. We got a big rally, right? So I do think it's a similar scenario. I think bond yields have saw their pivot high, and I think that it wasn't necessarily that Trump was watching the bond market. It was that Scott Bessent was watching the bond market. And it was that Jamie Dimon and all of these people were telling Trump, like, dude, you need to back off. And he definitely pivoted. I think when it comes to the CEOs in the companies, whatever, in other countries, like, he was going to do whatever he can. But when it comes to Bessent, as well as probably Jamie Dimon telling him, probably during an emergency meeting at the White House, that's enough, man. He has to listen. And now you're seeing Trump talk about the stock market, which is kind of ironic, right? Because he said he wasn't really watching it for a while. So we'll see, man.
Yeah. But what I can say is, obviously, we had a nice big rally today. Whether it's the bottom or a bottom and a tradable bottom, it clearly feels like a tradable bottom at this point. But man, the headlines, the volatility, you got to really take this as a day-by-day market. Tomorrow we could wake up and there's some news that it just throws everything back off again. So you really can't rest easy at this point. You can't just kind of... Yeah, I mean, so you can trade this market for now, but definitely be on your toes about it. Don't, let up. I think you don't want to get complacent here. We'd love to see a bottom. We'd love to see more positive headlines. We'd love to see more developments with our trade partners. Ultimately, we want to see the economy come back. So, but until that happens, and you get the news-driven rally, it's still going to be a tough market to trade and navigate. So I'm very nimble right now, and I am, slowly reducing, exposure if I feel that we're on, thin ice in certain departments. But yeah, that's it. I mean, I have a list of names that I really like. They're still very oversold. Like, for example, I always talk about Magnite. I mean, Magnite is now at $10, $11. It's at $11 after the 25% rally it had today. Okay, people are like, oh, do you buy this rally? It's like, well, dude, we're still down 50% from the recent highs in February. So if I felt that it was undervalued then, if the economy is really not going to take as big a hit from these tariffs, which is what caused it to sell off to begin with, there's still a huge run from here. So I am open to buying the gap up. I am open to chasing. I'm okay with that. And I'd rather chase. And it's okay if I don't nail the $8 low on Magnite, if I get back in at 11, if it means that, hey, we have a lot more upside to go, especially if the bull market is back on and we're in a new uptrend. But I think right now the billion-dollar question is, are we in a new uptrend? And there's just really no proof of that until we can, reclaim the 200-day comfortably, reclaim it, maybe find support at it, push higher. That's when you can start taking a deep breath. But until we do that, it's a trader's market. I think it's great that we had good news today and we rallied on news. That's much more important. But we just need to see more and more incrementally positive news, and I think he just bought us some time till we get that. So hopefully we see some deals come through. But otherwise, just I think what's really important for people who are investing in these markets is to brush off your fundamental and valuation textbooks and make sure you're looking at all the names that you really like. I think there's a ton of deals here, even after the 10% rally in the index, 20% rally in individual names. These things are still so oversold if it means that the economy is actually back on track. So I still think that this caused so much uncertainty that we're likely going to head into maybe a mild recession because people have already pulled back capex spend. They're still going to be uncertain. Like businesses are still going to think like, yo, can I trust this guy or is he going to change on me tomorrow? Like people are still going to be, careful with how much money they're spending. But we did get Google to come out and say, to reiterate their capex number, which was nice to see. So, if businesses keep doing that, then maybe the market's back on track. But yeah, I mean, we really need to see that. Otherwise, at the end of the day, he still wants to get interest rates down. How do you get interest rates down? I mean, Jay Powell is not going to cooperate, especially if the prices were going to spike and we're still seeing full employment. So I think he still needs to see inflation come down. He still needs to see unemployment tick up. And that's going to have him be able to lower interest rates. So that's kind of what we're rating on, which is why I think right now there's some uncertainty in the market, which could end up, as sad as it is to say, because people will be affected, like it can be a reason why the Fed is able to cut if we do see some sort of slowdown because of all this uncertainty. Shai, what do you think?
All right, so I'm caught in the middle a bit right here because I'm obviously don't have a cash position. I went pretty all in today. However, I don't view today's move as a confidence rally as much. I do believe it's more of an emotional release because we finally got a piece of the clarity. We got that operational roadmap that Trump's policy isn't just a made up calculus. It's somewhat of a derivative of a calculated phase. It's not a resolution, but it is somewhat of recognition that this might not be the edge of the cliff theatrics type of environment we've been in. I like to call it a circus, but at least for now, like it was enough to flip the psychology for a lot of investors. And when psychology flips in a structurally oversold market, because we were oversold on the daily chart, we're at RSI was at 20 on the daily chart. On the weekly chart, it's like 25. So when we're structurally oversold and the psychology flips on a catalytic move like that tweet, the rally is going to be violent, and it was. It was a 10%, 12% in Q's rally. It was insane. But let's be clear, this isn't the all clear for me. I am leaning back in, but I'm not doing so blindly. I have a stop loss that if we go below it and we pull back, I'm going to raise my cash position, but because I'm not going to pretend that any single headline or any single tweet is going to solve the larger macro puzzle, because we have a lot of stuff that we still need to figure out. We have the unresolved trade risk. We have what Logical was saying, that this upcoming earnings cycle, there might be guidance completely taken away because of the potential tariffs. And that's market hates the lack of clarity. And that is a ton of lack of clarity. We also still have a sticky inflation. We have a CPI this week that we haven't talked about. That's tomorrow. I think it's tomorrow. And we also have a geopolitical backdrop that can really shift or move based on a single tweet from the president. So I do believe that today was positive news, but it isn't signaling to me blue skies ahead where all go. I'm being very cautious. And I think that when I have zero cash today, it's not my permanent stance. It kind of somewhat is a trade, but it's a trade in my long-term positions. But I targeted my ad tech names like you guys did. I targeted my software names of the consumption model because those two components of my portfolio, they were hit the hardest because what's the first lever to get pulled in a recessionary environment? It's ad spend. What's the kind of environment for business spending when things are bad macro wise? It's the consumption models in the software space. So I put all my chips on those themes today, but I think it's going to get messy. It's going to be choppy. Like the bottoming process is never clean. It's always going to be noisy. It's always going to be chaotic. We went up 12% today. We might be down 5% tomorrow. When you try to bottom out after a vicious pullback that we've had, they're going to be filled with failed rallies, fake outs, and whipsawing sentiment. Like everyone's bullish today, they're gonna be just as bearish tomorrow. Like that's why it's gonna be chaotic and choppy. Like I'm gonna be looking for structure, not just in the headlines, but like structural changes in trade policy. Is China gonna actually come to the table? Who's gonna blink first? Because today, Trump blinked. He did. You guys might disagree with me, but he did, and I
No, he
think
definitely did. There's nothing. Yeah,
Not-
he flinched.
well, it's because like what you said, logical. Or it was I don't know if it was Sam or logical. The 10-year yield, I think it failed. He failed. So like he saw that last night. He won't ever admit this, but he saw the 10-year yield was like at 4.5% when pre-liberation day it was like a 4.2, 4.3. So like it was not going the way he wanted to. So now they're like, all right, well, this is clearly not working. I have to do something. And today was that something. I don't know. Do you guys disagree with me or that? Yeah, Sam.
So first I want to touch on a little bit of micro here because you know what's so crazy is that we talk so much macro lately. And I remember when we first started the show, and even like back in the OG days, like literally last September, we were very micro. We were the growth podcast. We were the growth podcast on Twitter Spaces. Remember that? And shout out to the OGs out there. If you're still watching, hell yeah, bring it. But now, and not just us, but a lot of spaces on Twitter, even like the most micro people on Twitter that I follow, are talking about macro. You, and me, we are not macro experts, all right? We are not macro experts. I admit, I'm not a macro expert. This is not my specialty. I studied macro a lot in 2022 and 2021 and 2020, but I am not a macro expert by any means. I've built my expertise centered around specific secular trends and specific companies in that secular trends, and I always go along the leaders. And you brought up ad tech, and that was a concern for me, okay? TTD may be around $55 right now, but it's still not at $70, which is where it was before this whole thing started, right? AppLovin is near back where it is. So AppLovin, as far as the market's concerned, is actually still a leader. However, I was I don't want to say very close, but I was considering cutting my AppLovin position. And I held off because I wanted to at least like wait and see what happens next quarter because of those short reports that came out from Muddy Waters as well as those two other agencies. I keep forgetting the name of it. But I read that Muddy Waters report, and dude, I mean those cases were pretty solid. I mean there were like some holes in it, but it was like these are some crazy accusations they're making, and they don't necessarily sound so crazy. Like they're like legit concerns about AppLovin specifically. But at the same time, AppLovin and Reddit were up a monstrous amount today. TTD was up a monstrous amount today. In fact, Reddit is where it was at before Liberation Day. So is AppLovin. However, TTD is still down there pretty far. And, you know, Magnite and PubMatic, I haven't followed those lately, but, you know, I'm sure those have recovered pretty considerably today.
I think
so,
I think Magnite was actually up the most out of all those names today. Crazy.
I mean, it's like, what was it, like a $1 billion, $10 billion, or
$2 billion.
$2 billion? Okay. I mean, yeah, that would make sense. Smaller caps to have, like even freaking Rocket Lab was up a crazy amount today.
Hey, it's well deserved. Rocket Lab is well deserved. How dare you?
Even AST Space Mode, but Rocket Lab is above where it was in Liberation Day. Like I'm very glad I bought Rocket Lab. Anyways, going back to address the macro concern. That was the micro concern. Going back to address the macro concern. So the 10-year is still like 4.2%, right? So like we're literally back to where we were in Liberation Day. You said Trump blinked. At first I thought you were referring to China. When it comes to China, I don't think he blinked. He didn't blink. This literally is the reason why this all happened. I think the market's very aware that this is the reason why this whole thing happened, because he is literally targeting China. And Jaguar Analytics was talking about it Sunday night, and I was like, oh yeah, okay, this kind of makes sense. But like after today, I think it's very out there. Like it is Trump versus China. We are back in 2018 for the trade war, but this is like to the maximum. This is on steroids right now. But the difference is the Fed is not hiking rates. What was actually very interesting was that there was nearly a 60% chance the Fed was going to cut rates in May. People really thought it was going to happen. But as soon as today happened, it's like around 20% right now, 10, 20% that they're going to cut in May. So probably not going to happen. I mean, I wonder what your guys' thoughts on that. What do you think about logical?
Real quick, you know what I will say is that, you know what, we're definitely not macro experts, and I don't really ever plan to be. What I can say is it's good to be aware of the macro, especially when you're in these very noisy volatile environments. But what I've found to be a lot more helpful is technicals and understanding what the price action is telling me. I think that's been the key. I mean, it really is guiding me through this process. And so I think that's something that I've really honed my skills on because, dude, there's so much information in the buying patterns, and that's what the candles are showing you. And if you look at the volume, if you look at the recoveries, if you look at the bounces, if you look at, the specific type of candles, I mean, it has a lot of information that it's telling you. Like, I remember before we got the Liberation Day, April 2nd sell-off, we basically had SPY around 570, and it was kind of rallying. And then one day it had like this large red candle to the downside. We just dumped really hard. It was a couple days before or something, or maybe a week before Liberation Day. And it was on low volume, but we had a big drawdown. And I was like saying, okay, that's bad. People are like, oh, it's just a low volume sell-off. That's actually not bad. That's something else you learn from technicals. But in this scenario, I was thinking about it and I was like, no, dude, like low volume and a selling day led to a big drop in price, which meant that nobody was at the bid. Nobody was willing to buy the market at those highs. So I was kind of telling you that there was no risk appetite in that moment. So anyone wanted to sell, they just were overwhelming the liquidity that was in the market. So I will say that like looking at the technicals has really helped me understand like risk appetite, what's happening in the market and navigating this stuff. So I think that is good, and like just studying as many charts as you can. But yeah, I mean, in this environment, it's still good to be micro focused because you need to have a list of your favorite stocks that you're interested in owning and just be ready to buy them when the time is right. Dude, I was buying stocks so quickly when that news came out because I knew the top 5 to 10 stocks that I wanted to own. I added Snowflake, I added Rubrik, I added the Trade Desk, I added Magna, I added PubMatic, I added Robinhood actually because that has been showing a very nice chart. Actually, that one's probably the closest strongest today. And I probably added other things. Yeah, Burna Technologies, another small cap too. Reporting earnings tomorrow. Funny enough, I actually have an earnings now.
Were you open Hood?
Real fun.
You bought Robinhood?
I bought Robinhood and I'm still long it for now.
Nice.
I bought it also for a trade. Because if I need to drop down some of my exposure, maybe it's something that I cut. Because the chart looks so strong and it seems like it could be a leader out of this if we do get kind of to lead out of this, like into a new uptrend. So I do like the name. I chased it a bit, but is it really chasing if we're still down 30, 40, whatever percent from the highs? Like, again, if we want to go to the highs, then it's probably going to be a solid horse. And, obviously they're doing a lot of great things at Robinhood. It just depends, right? Because it's still cyclical, but, I've been hearing kind of whispers like, maybe they'll go after a bank charter and become a full-blown like bank fueled by retail investors. I'm like, yo, like this could be bigger than you realize. And so pretty interesting for sure. I'm not going to sit here and say Robinhood is my highest conviction name, but I think it was a good name to pick up right now. And you want some liquid leaders. I think Rubrik showed a lot of strength today. I think that Snowflake showed a lot of strength today. I mean, closed above 150 now. I need to check where we are.
Everything showed so much strength today. That's a crazy thing.
Yeah.
Like the message I sent you guys was wild. Around it's like 25% of my portfolio is up 20% or more right now. That's crazy. I don't know. Do you guys think there's gonna be profit taking, or was this actually like a catalytic move and we're gonna get a fall there? Like that's a big question I'm trying to ask myself.
Well, I would just say that we did have profit taking if you paid attention to SPY's price action, QQQ's price action, and then we rallied to the highs of the day and closed at the highs of the day. So there was some profit taking today. Individual names did have some profit taking. I mean, I was profit taking along the way, but that's because like I pushed my long exposure to like 130%. On the off chance that we kind of pull back a little bit, I was like, yo, let me like not be super long because this isn't a market that you can be over exposed. So like, yeah, I mean, I think anyone that's trading this market, and you have to be trading this market, they're going to be taking profits along the way because nobody's going to trust a bounce until it shows you signs. And it kind of comes with like any good trader is going to say, recapture the 200-day. Until then, we can't really be talking too confidently about anything. So Sam, what do you think?
Yeah, no, I mean, for sure, dude. You're the technicals guy. I agree with you that on a short-term basis, not a long-term basis, a short-term basis could be anywhere from 1 day, 1 hour to maybe 2 or 3 months or even 4 months, right? Positioning and sentiment is really all that matters in that short term. But on a long-term basis, A great business will yield great results and outperform the market, usually. Depends on the secular trend. But you're right. And you said this before when we were texting each other. This is a trader's market. This is not a market that is built for investors because of the fact that price action is moving so much and it's caused by fundamental changes in the economy. Okay, but now, if you ask me, that is off the table. The fundamental changes in the economy are going to be impacted by supply chains from China, but not to the magnitude of the other 40 countries around the entire, or 70 countries, I don't know how many countries around the entire world, hit with 10% tariffs across the board. When we were pulling back, the biggest names I was adding to were Mercado Libre. I restarted the position in Meta. Meta is up like almost 25% since the lows. I mean, what else isn't? But Meta was definitely a great buy around the 480s. I actually did not add. I did add to Google as it was going down, but I did not necessarily add to Google near the bottom. The companies that really stood out were Mercado Libre. It was definitely Meta. Amazon. I added some Amazon. I actually added a lot to Rubrik. I added a lot to Robinhood. I actually doubled my position around $30. These were the companies that I know are going to do good long term. And you asked me, I think we hit a bottom. I think April 9, 2025 is going to be known as the Trump pivot. It's going to be in the history books, whatever it is. We're going to be referring to this later on. You know that meme where it's like you got the dad and you got the daughter sitting in his lap and you got the son at the bottom. And the girl's like, hey, dad, how'd you make so much money? And the dad's like, I bought the dip in April 9, the Trump pivot. And the son's like, effing legend, right? That's literally this is what it's going to be. We're going to see that meme used over and over again. This was a day that we're all going to remember. I personally think that we had the bottom already to whatever fundamentals we see. But it will be very tough to bring us down there and bring that much uncertainty back to the market without imposing a crazy amount of tariffs in China or without something breaking, right? If something breaks, all bets are off, man. Something breaks, that's going to be pretty scary. But I think we would know right now if something broke.
I mean, I just also like I don't know. I hear what you're saying, but man, I'm not fully confident yet. I'm not fully sold yet, but I will be fully sold if the price action follows through and we see some better headlines. That's kind of what I'm looking for, and otherwise I'm on my toes about this. And also, today might have been the Trump pivot, but remember, Monday, we actually hit the 481 lows on SPY. So that's probably the bottom, actually, because everyone was calling for a Black Monday all weekend, and we finished the day like plus 3% green. So that's pretty funny.
Jim Cramer was.
Yeah.
Jim Cramer was calling for Black Monday.
Jim Cramer was calling for a Black Friday, or Black Monday, and he basically completely reversed everything and said, this is what happens when you stay the course. It's like, dude, you were just fear-mongering to everyone over the weekend. Like, I get it, though. It's a tough market, so I don't even blame him. It's really tough. I will say one thing today that I saw that made me a little bit more bullish, and which is why I started cutting a lot of my shorts. Like, I was just covering them slowly. There are some pages on Twitter that, like, they post flow, like, notable flow that comes through. There was an Apple large opening sale of June 150 puts. Huge volume, like $6-7 million. JP Morgan buyer of January 2027 $220 calls for over $11 million headed into earnings this Friday. So that was a really good sign for me. And I was like, okay, dude, people are bullish into the earnings.
You said that those were short puts on Apple, you were saying?
Short puts. So they sold puts. And then the JPM calls, leap buys, which were really interesting because we have earnings this Friday. So, I mean, I guess they're, whatever. And then there was like that degen, of course, it's crazy because the president of the United States, tweeted basically today saying, great time to buy the dip, basically, and then says the 90-day tariff pause, which is absolutely ridiculous. And it's crazy because we also had 10,000 0 DTE $510 calls on SPY, and we basically closed around 548 or something. Dude, that guy got rich. And I was looking at that flow, and I'm like, should I just YOLO some? Like, this is crazy. Like, we're clearly not going lower. And I sat and looked at it, and I'm like, I'm not going to chase 0 DTs. It's not my style. I should have chased 0 DTs. That guy made a killing. So, yeah, I will say I was having a pretty bad day in the morning. I mean, so I'll tell you why. I've shifted my portfolio heavily, concerned about this economic slowdown, going into biotechs more so. And man, I was about to cry uncle this morning. I seriously wanted to liquidate my entire portfolio and throw in the towel. That's how I knew we must be close to a bottom. I was seriously feeling like the pit of my stomach. And dude, I looked at like the 10-year chart, the monthly chart on XBI. Dude, XBI was down 4% today. It's like this thing gets beaten every day. And it's like, you know, the thing is about having a thesis and high conviction about a stock or whatever, or about a sector, is that oftentimes being early is the same thing as being wrong. And that's what it's felt like. I've gotten my ass kicked. And today I'm looking at this thing down 4%. SPY's green on the day. It's flat. And I'm like, dude, I realized that I've been hedging the wrong way because I've shifted so much of my portfolio towards biotech. I really should have been shorting SPY and not, shorting XBI instead of SPY-like things because the shorts weren't working and my longs weren't working. So I'm learning a lot about myself and the trading styles, especially as I'm adjusting my portfolio and the different types of sectors and positioning. But yeah, I mean, I looked at the 10-year chart on XBI. Dude, that thing, I did not think it could get this low. It got to like $66. By the way, the lows of today and the 52-week lows are actually $66.66. So 6666, which is just horrible. And then I'm looking, and dude, October 2023, when small caps were getting sold hard, that was around 65. October 2022, which was the market bottom of the bear market, 66, whatever it was. It's like exactly at that level. 2020, bear market from COVID, 66. 2018, taper tantrum, 66. We are literally right back at those levels. So it's been a very notable bottom like area, like support. And basically we've closed the day at like 75. I mean, I've never seen anything like that. Obviously everything ripped in the market, but it was just really nice to see that biotech's caught a bid exactly where they needed to. Because if it went any lower, I was about to puke it all up, I swear. And it's just like, you know, I'm talking to really smart people in the space, and they're even like, I'm lowering exposure because like this could get worse. Like, you know, market can stay irrational longer than I can stay solvent, basically, and that's kind of what it feels like. There's extreme despair in this sector, so I was just really happy to see that we bounced. Everything was perfect. People were waiting probably for that bottom. I actually did see more notable flow come in for XBI. I saw some 70 call debit spreads, 70 to 90s. So they bought the 70s, sold the 90s for I think September. So I mean, it was a perfect place to buy the dip, I think. I didn't think we'd get here, which is why I bought the dip way earlier. Clearly, I was wrong, or at least I was early. But we'll have to see what happens. I mean, going from 66 to like 75 in a day, crazy. And, you know, some of these names, Springwork Therapeutics, which is, you know, one of my larger positions, they had a buyout offer potentially from Merck, or there was rumors. Got all the way up to like 60 plus. Dude, it was down to 33 today, a month later. And just an absolutely steal at these prices in my view. And that thing ripped from 33 to like 37 or something after the news came out about tariffs. But man, what a crazy day. I went from like minus 4% on my portfolio to like plus 10% at the end of the day. I think a lot of people had that same story. Maybe not starting from minus 4% if you weren't heavily concentrated in biotechs like myself. But man, I feel like XBI keeps capitulating and every day. So I can't keep calling the bottom on this one anymore. I'm getting crushed. Anyways, that's all I wanted to say is hopefully we saw the bottom in biotechs. And if we get an economic consumer slowdown, maybe it starts to really work from here. I would like to see actually some bifurcation in the market if that is the case. Or just, you know, bull market's back on, everything wants to work, and I'd love to have like a big biotech position while still layering on a lot of the other ad tech stuff and other, you know, software names that we like, etc. And I'd like to have a more balanced portfolio like that. So let's hope for a good market moving forward. And yeah, that's kind of my final thoughts on today. And let's just see, man. CPI, what happens next week? Every day, it's like so exhausted. I don't know. Any final words from you guys?
Go for Shay.
I mean, final words for me. I mentioned it. Today was great. I loved it. I never had a 15% day in a long-term growth portfolio. It was incredible. I'm not uber bullish still. I still am like, it's really important to maintain your optionality. Don't get greedy. Don't get over levered. And I believe it's just, there's going to be more pain ahead, and there's going to be some really wonky earning reports that's going to happen this cycle. That's going to provide some opportunity for long-term winners that are impacted in that that were just sucked into this high stakes poker game that's going to be very short lived. And I'm just make sure you have the dry capital on those sidelines. And like what Logical is saying, like have that game plan. The market doesn't wait for you to feel confident enough in adding the stocks. It's going to move ahead of time. So I think it's really important for you to have a game plan because it's going to get choppy. It's going to be just as volatile. And that is not going away anytime soon. And I wouldn't be surprised if we're up 12% today. I wouldn't be surprised if you give up 50% of that move by the end of the week. That's how crazy of choppiness I'm expecting. But yeah, Sam, any last words?
I don't think it's going to happen that fast. Only because the VIX is down to 33. For it to come down that much, the VIX would have to rally again. When you think about the VIX getting crushed by nearly 50%, how much did the VIX come down? Hold on a second.
Yeah, was it like 55, maybe 60? I don't even know if it got to 60.
The VIX came down by 35%. When you think of that kind of stuff happening, and especially the offsides with the short coverings today, because this was a short covering rally. Like, it was a short squeeze, for sure. That added to what was happening. You'd have to have a lot of protection being thrown on. Also, a lot of reshorting to happen again. And I think that those shorts were continuously getting squeezed throughout the day because of the disbelief that this was actually going to be a rally that was going to hold. I don't think we're going to pull back by the end of the week. I think it's going to take a little bit of time to play out. I think the VIX needs to cool off a little bit, pull back a little bit. I think volatility needs to kind of settle out in the market. We probably saw a lot of long-term money come back into the market, especially from ex-US. We saw ex-US outperforming pretty much since the beginning of the year. Today, the U.S. outperformed. So it's possible that money might be here to stay, if that is anything. And especially if bonds begin to rally again, that's going to provide a bullish backdrop for the market. Because obviously you love the 10-year dropping, right? The 10-year dropping, which means cheaper debt. I think this might continue for a little bit. We saw red day after red day after red day after red day over and over and over again. Like, we literally got so used to losing money. I got so used to losing money every single day. And honestly, I got so numb to it at a certain point. I was just like, I'm going to lose money today. And then boom, I lost money, right? But today was probably one of the few days where we had a sustainable green day. And is it going to continue? I think that bull markets rally on uncertainty. And no, it's not uncertainty. Bull markets rally on fear. I forget exactly what the term is. But what I do know is that if you miss the 8th largest up days or green days in the market per year, you're going to lose. You're going to be underperforming the market by 8%. And they usually follow very bad days. And I think today was obviously one of those days where it will literally make or break you for the entire year. So, my motto is stay invested, regardless of what happens. Modest cash position, if anything, if you're cautious. I got a little bit of cash, but I don't know, man. I mean, I might slowly deploy it over time. We'll see what happens. But I'm still cautious, but at the same time, I would not be surprised if we just melt up from here. So we'll see, guys. But anyways, I think that's pretty much it. You got any last words, Logical? I don't know if you went.
Yeah, I mean, I think you make a good point, man, because it's such a tough market to navigate. And I think if you do stay invested, it's probably better than trying to do whatever this volatility trading stuff is, man. It's crazy. So, yeah. Just stay the course, whatever that is to you. Be comfortable. Know that there's volatility ahead. There could be more downside ahead. But we did a lot of damage. We were down 22% in the S&P. And just to put that in context, the 2022 bear market was pretty bad. And the max drawdown was 27%. So, let's remember that. And a lot of these names are down. They were down. Some of the names were down 70%. That's crazy. 2 months. Any of this stuff can revert if we get some good resolutions. But I mean, clearly a lot of damage has been done. We just don't know what that damage is quite yet. So let's wait on some of the economic data. Let's wait on some of these earnings, get a little bit more of a clear picture. But yeah, watch the price action in the meantime, because that's the only information that we're getting on a daily basis. That's not, it shows you the appetite for people wanting to allocate at this moment in time into risk assets. So, because until we get like concrete fundamental information like earnings reports and economic data. So, yeah, okay. Stay sharp.
So, before we sign off, just want to go off with the earnings this week. Tomorrow, we have a company called Love reporting. Lovesac? I don't know. Is that like a market mover? I'm not exactly sure.
No, definitely not. It's like a couch company, I think.
I know. It's not a market mover. But Friday, I'm looking at earnings now, by the way. Friday, we got JP Morgan. So Chase Bank's reporting this Friday. That'll be very interesting for the prints you saw for those calls. We got BlackRock, Morgan Stanley, Wells Fargo, BlackRock, or no, that's not BlackRock. What's BK?
Burger King? I don't know.
What the hell company is this?
Hold on, I was gonna say tomorrow there is.
Yeah.
Oh, it's Bank of New York Mellon Corp.
Bank of New York Mellon. No, yeah, that's Friday. That's Friday.
I was gonna say, yeah, we're gonna get mostly the bank earnings right now this week and next
Yes.
week, which is great. Which should tell us about any financial distress.
Yeah,
I'm not
yeah.
expecting that much, but there is one small cap that I'm excited about tomorrow. I mentioned earlier. It's Byrna Technologies, BYRN. So obviously, I love the small caps, and they're growing like 70% year over year or something like that. Actually, Shai, you might be interested in that. I think it could easily be like an acquisition target for like an Axon or something like that. They basically have like non-lethal
Oh, yeah.
sort of weapons and like I don't know. You should look into it. It's very interesting. They're growing fast. We could talk about it another time, maybe after the earnings tomorrow, and see how they do.
Yeah, I didn't even know they were public. So what else do we got for next week before we record? We got Goldman Sachs on Monday. Tuesday, we got Johnson & Johnson, Bank of America, Citi. And then we got IBKR, Interactive Brokers. That's all you, baby. United Airlines. Wednesday is ASML. That's going to be an interesting one that reports Wednesday morning. And then TSMC on Thursday morning and Netflix in the evening. So this is going to be, we're right back in earnings season. I just had a crazy busy last few weeks with this freaking market. I am not ready to be this busy again, man. Anyways, catch you guys later. Next one, this is episode 13. See you guys in episode 14. Hope you enjoyed it.